This is a makes a good segue into another question I had, and that's with the gold price coming under so much pressure post election. Basically, it went from almost mid 1300s, and as we speak right now, the spot price is it's about $1,170 an ounce. So there's been a lot of technical damage on the charts, and for the most part, the miners have held up pretty well. I mean, we're not trading at the absurd valuations that we were, late 2015 and early 2016. But with that said, I think one of the greatest fears retail investors have with playing this space is the immense volatility, especially when the stocks are going in the downward direction.
Yeah.
I've written some articles on this. My own personal take is I actually prefer, quote unquote, catching falling knives because, I just like for me, I think you get better value doing that because if you're not a day trader and your thesis is more medium to long term, talking, maybe holding for 6 months to like 2 or 3 or 4 years or whatever, then the whole technical analysis I don't think is as pertinent because you're not trading these stocks. And for me, it's like if I can find value, then I want to go after it because I've seen the other strategy that other investors use, and that's I'm not going to do anything until I see a trend reversal. So they wait for that, but then the initial reversal usually you don't want to jump in because you think it's too early and you don't want to be get like psyched out where you're premature and then it comes crashing back down. So the last time around, a lot of people weren't buying gold shares back in February or March. They waited until basically July. I had a lot of friends and people email me and basically saying, I'm starting to believe in this July August timeframe. So then these people start buying their their allocation and buying in tranches around that frame, thinking that it's a safer way to go about it. But as we've seen, this sector, mining stocks in general, it's just so volatile that when it turns around and does a 180 again, now the people who bought in July and August, I mean, they're suffering the most. I mean, it's arguable that wasn't the best entry point. So that's kind of why I kind of prefer chasing on the way down when, these stocks get really, really, really cheap. Like, a recent purchase I made was like Sarama Resources, just, putting that out there as an example of a recent acquisition I made. And, it was down 50% from the last 3 months or so. So I thought, hey, that looks like really attractive valuation kind of. How do you guys approach falling gold prices? Does it scare you or does it motivate you to buy more? Like, do you guys not have any fear, or do you start questioning your thesis and why you're doing this? Are you trying to be more careful? Are you trying to trim positions, or just what goes through your mind as the price declines?
Babby, you should answer first because I've got a more long-winded answer.
All right.
Afterwards.
Hey, maybe mine is long-winded too. So the thing about this whole market, what has been actually helping me, particularly at this moment, is that because I follow people in the industry, and I take precedence. Like, I think people are more important than the actual stocks. By following these people, I've actually diversified out of gold, not on purpose, just because these people said, hey, this is a really interesting stock, I'm going in heavy on this, and it's either copper or zinc or oil or something that's not gold. And I didn't do this on purpose to diversify out of gold, but I did do it because I liked the story, and I trusted those people because I knew that they were putting in a lot of money themselves. So for me, yes, some gold stocks are taking a huge hit, as with everybody else, but there's one particular, say, oil stock that I own that is just flying through the roof, and that kind of helps, because I'm not really so depressed. I'm not suffering that much. It sort of balances out your portfolio. But when I look at, I was just checking gold prices, and it has just breached major support, which should be worrying for everybody if they're in it for the short term. I'm really not putting too much pressure on my portfolio to perform, so to speak, because I have such a long-term view of what my returns should be, and I don't expect my returns to be so amazing. I mean, that's what we want at the end of the day, but that's only part of my assets, and because I know that it only needs to perform so much for me to get to my ultimate goal, that I see this as an opportunity to buy more. I love buying stuff that I love buying categories of things that people don't like, such as uranium. I'm still wanting to buy more uranium in December as a nice Christmas present for myself. But look, I mean,
I
just
don't think
look at the
I've heard anyone
prices.
say that before.
Yeah, a Christmas present for myself. Yeah, exactly. But this is the thing. Like, I won't go for the most hated stock per se, because there's usually good reason for that. But I will go for the most hated sector, for the most hated commodity. I have no problem doing that. And just like Jay said, people were not excited about buying stuff or about buying gold stocks in January, February of this year, and they should have. And
Mm.
I think that this is something that does not really affect me at all. When I see my, for example, uranium stocks going down, I immediately think, how can I get more money to buy some more, right? Which I guess, in a sense, if you're playing a long game, that's the way that you should think. Yes, there are more refined ways of doing it, and you have to either do that, or you have to follow the market so closely on a daily basis that you see the trend change early enough and then make your bet. But also, you can get you can get yourself wrong, just because the trend will change, maybe from a chart analysis point of view, and then something happens, and the price of the commodity itself goes down, and then it sort of breaks all of your trends. So it's much more risky. I don't play that game, although I'd be willing to do that on top of the long-term investment. But no, this is actually, it kind of makes me wonder, how can I get more money to buy more? I like to suffer.
Yeah. Oh, that was great. So, yeah, I have so much. So hopefully I can kind of organize my thoughts a little bit. But I'll immediately mention, like there's definitely a personality quirk thing here. Like I generally feel better when I buy stuff as it's going down. Like after, and we talked about this on a previous call. Like, just after you buy something, like, how do you feel? Even if something makes money, if I'm chasing something and it's moving up, it doesn't feel right for me. I mean, I've experimented with this, with real money, and consistently, I am okay with buying something where I have lots of conviction and it keeps going down, and I just keep buying more. That is a road to ruin. If you don't if you made the wrong choices, that is absolutely the number one road to ruin. But the as a side note, there's you if you are new to this, like, this is a great newbie type thing. Like, people have different personalities. They do not, like, there's no way that anyone can trade or invest or speculate in the same way. As a very opposite approach to what I take. If you check out CEO.ca, there's this really cool room that formed. It's hashtag hot pick, or just I mean, it's one of the most watched rooms there. And if you look at that, it's just fascinating. Like, they are trading in and out of stuff all day, and like sharing info. And like, right now, the marijuana stocks, like, those are so hot. I mean, they're making thousands, tens of thousands, whatever, dollars. But
Mm-hmm.
I cannot participate. Like that, and it's not about like the marijuana weed stocks. It's just about the nature of it. Like, that does not work for me, and I figured that out over time. But it might work for you if you're listening. Like, that might be your thing, and so you have to figure out kind of what fits you the best. I think in general, Fabby J and me, like, we're kind of in the same boat. I mean, otherwise we wouldn't all be kind of like excited about buying stuff on the cheap. But I definitely take things a little too far. I love Fabby's like kind of religious comment earlier. I mean, there's a lot of religion going on, in the mining stocks. Not like real religion, but definitely cult type stuff. I mean, Northern Shield, you definitely see that. Like, for me, I have gotten obsessed with the gold plays, but really with these small exploration plays, because I have this built-in conviction that, like, this, they're not all going to work out, but I am going to find the big thing there. And like, I've gotten myself to believe that. And hopefully, again, it's not like the road to ruin, but like, I would rather stick with that than move on to something else, because I've got the conviction there, and I actually do see some of them. I've had success over the last couple of years. I feel like I know more about it than the people I'm competing with. Sometimes I don't feel like I'm competing with anyone, because I'm literally the only one buying, which is kind of scary.
That's even
But
better.
Yeah, to Jay's point, I mean, like I'll bring up Sarama again. I mean, it's one I like more than ever. I may make another video on it because it's just amazing that they've had so much success, and there are a few people talking about it now, which is great. But when I first bought, I mean, this is the best example of if sometimes it is better to buy on the way down. Like I first bought at 8 cents, and then I bought more at 6 cents. This is back at the end of 2014, and then there was just this huge volume push. I mean, somebody had to get out, tax loss selling, and I think I bought a little more at like 4 cents. And then I bought a good chunk at 3.5. Now, of course, looking back, I wish I bought more. But somebody picked up millions of shares at 3 cents. I mean, like literally millions of shares. And the next day, and this was Thanksgiving Day, 2014, Acacia Mining, which was formerly African Barrick, announced a blockbuster JV. Sarama was trading at about 3.5 million Canadian. It had like 3.5 or 4 million cash, and it had 1.5 million ounces in the ground. And I always come back to this because if you didn't buy on the way down, I mean, it jumped up to like 8 cents the next day or two. So like you could have doubled your money, and even if you bought at 5, 6, or 7 cents, or you kept buying, you would have made more money. But then like it kind of hovered around 8 cents after that. But I think you would have felt so much better. I think anyone would have felt better buying into that weakness and literally getting a double or more than a double like overnight. And it's not that you predicted that happen, but it just got so cheap that even if that deal didn't happen, you just didn't know what was going to happen the next day. And I love that feeling. Like I am okay with like doubling down and buying down for those types of moments. And there will be more moments like that with these really small juniors. To Fabi's point, I mean, sometimes it does feel bad to buy at 4 cents instead of 3 cents, and then at 2 cents. But like I'm okay with that when I have a lot of conviction on it.